All right, welcome everyone to Lesson 1 of the VectorVest Successful Investing Quick Start course. I'm excited to kick this off today and show you the first steps you've got to take to become a successful investor. The big idea of this lesson is to show you how you can analyze any stock in less than 30 seconds. You've got to be able to analyze your stocks. Not just your stocks though, but any stock you may be interested in. And that's exactly what we're going to cover today, and you're going to see how you can do it in less than 30 seconds. So here's the game plan for today. We're actually going to start today by discussing the big mistake a lot of people make, which you should avoid. After that, I'll guide you through building a watch list of your stocks. This will be important because you'll use this list to not only analyze your existing stocks, but in our next lesson, we'll start to weed out the bad ones. And then once we do that, I'll walk you through the exact indicators to use to analyze any stock. And then we'll finish up today with action items for you to take. So without further ado, let's get right into it. Remember, it all starts with the belief that every investor needs to know what a stock is really worth, how safe it is, and when to buy, sell, or hold it. And the big mistake a lot of people make is saying, well, I'll just get my advice from those gurus on TV. They must know a lot more than I do. Well, after today's lesson, you will be much more knowledgeable than any quote-unquote guru on TV. Just understand a couple of things. TV shows, they exist for ratings, not sound financial advice. Plus, it's good for their business when people are in the market and buying stocks. And we'll talk about that more when we get to lesson 3. But just keep in mind that TV personalities, they don't have your best interest in mind. So the way to avoid this mistake is to be able to analyze any stock yourself. It's very easy to do when you leverage off of VectorVest. So let's look at how to do it. So I'm just going to hop over into VectorVest right now. All right, here we are in VectorVest, and the first thing you've got to do is put the stocks that you own into a watch list. Now, if you don't own stocks right now, that's fine. Just put stocks in there that you have owned or you're interested in. It's very simple to create your list. In fact, I'm going to walk you through it step by step right now, and it's actually going to be one of your action items at the end of today's lesson. The first thing you want to do is open up VectorVest and click right here on this Viewers tab. And second, you want to come over here to where it says My Watch List and just click on that so it becomes highlighted. Third, you're going to come up and click on the My Watch List or the New Watch List button. And it pops up this little window here called New Watch List. And you want to give it a name. For example, I'll just call this one My Stocks. Helps if I spell it correctly. You can call it something like My Portfolio, Stocks I'm Interested in, but I'm just going to call this one My Stocks. And I also recommend putting a date next to it so you know when you created it. Once you give it a name, just come on down here and click on the Add button. Notice that the watch list is empty. You don't see any stocks in it because we still need to add stocks by typing in some ticker symbols up here. So when you click in here, you get a little blinking cursor and you just type ticker symbols, or you can type the company name and it'll help you by finding out the ticker symbol for you. So if I want to add Johnson & Johnson, I'll just type in JNJ. And if I want to put an Apple, I'd put a comma and then put AAPL and so on. For the purposes of this video lesson, I don't want you to get hung up on the company names that I type in. The important thing to understand is the information that you're going to get. So I'll just type in a bunch of ticker symbols here, and then let's take a look at the information. Once you've typed in the ticker symbols, you can just click on the Add button or just hit Enter on your keyboard, and you get the stocks listed right below. Remember, the big idea of this lesson is that you can analyze any stock in less than 30 seconds. Now, obviously, I'm going to spend a little more time explaining it to you, but when I'm done, you'll be able to take any one of your stocks and get a complete analysis very quickly. A watch list is one of the most powerful pieces in your investment arsenal. Right off the bat, you should know that the stocks in a watch list are sorted for you, so the best combination of value, safety, and timing appear here at the top. And we'll talk more about that in just a minute. So these first few columns here give you some basic information, such as name, ticker symbol, exchange, and oh, by the way, this little X that you see right over here, that lets you know that the stock is optionable. And then next to that, we've got the price and how much that price changed from the prior day. Now, starting with this value column over here, that's where you get everything you need to get a complete analysis of any stock very quickly. This is really what starts to set VectorVest apart from everywhere else. What we do here at VectorVest is we take all the data in, and Reuters can give you like 500 columns worth of data, but we take all this data in and we transform that into useful information. I remember I was sitting down watching TV with my wife and my children. We were watching this show called Worst Cooks in America. And basically, these chefs would take all this meat, chunks of meat, and just kind of shove it into this machine. And they'd crank the wheel, and out came usable meat that they could use, right? Well, if you're not careful in the market could bury you with just a blizzard of data. So what we do here at VectorVest is we take all that data and we crunch it up for you, and then we provide you with the useful and actionable information. Huge time saver, saves a lot of headache, and you're going to see how good it is in just a second. So let's go back and take a look at the list of stocks. Okay, starting with this value column. Value is what we feel the stock is currently worth. And we factor in what we like to call the good guys versus the bad guys. The good guys are things like forecasted earnings, earnings growth, and profitability. The bad guys are things like interest rates and inflation. If you think of it like a seesaw, you want the good guys to outweigh the bad guys. If the good guys are winning, you'll see value increasing. And the beauty of looking at price compared to value is you can immediately see, oh, well, here's price and here's its value, and you quickly get a feel for which stock you might be interested in. And here you can see a few examples right here in this list. So you can see here's one that's undervalued, here's another one that's undervalued, and here's another one. But you have a few where the price is over the value, like here and down here. Just keep in mind that price and value tend to meet over time. And typically, price will go to meet value wherever it is. So if price is under the value, price will tend to rise to meet its value. And if price is over the value, typically it will come down to meet value over time. But you'll notice that you may also find one like this one down here, where the price is over its value, but it still has one of these buy ratings on it. So the price to value relationship doesn't tell the whole story for us. As an investor, we still need to know if we should invest in a stock or just put our money into a bond. The stock market is not a guaranteed return. There's some risk involved, right? Whereas something like a bond has a fixed return. Basically, you know what you're going to get. So Dr. DeLito created an indicator for you which answers that question. That indicator is called RV. So let's go take a look at that. Here in this next column, you see it's labeled RV, and that stands for relative value. It looks at the long-term price appreciation potential of a stock compared to an alternative investment in a AAA corporate bond. In other words, it's looking at the upside potential of a stock compared to just putting your money into a bond. For example, we've got this first one here. It's got an RV of 1.3. That's very good. It tells us that this stock has the potential to outperform a AAA corporate bond by 30% over the next 1 to 3 years. This one has the potential to outperform it by 33%, 42%, whereas this one way down here has the potential to greatly underperform a AAA corporate bond over the next 1 to 3 years. So you've got some great information just right there in that column telling you whether it's worth taking the risk of putting your money into the stock market in that particular stock, or maybe you should just look for another stock. So RV is the operative indicator when it comes to value. Now, RV and value are important, but the next indicator is even more important. The next column here is RS, which stands for relative safety. This is an indicator of risk. It looks at the consistency and the predictability of a company's financial performance. And we've found the best investments are with companies that consistently make money and make more money every year. I mean, just think about it. Let's say you have a brother-in-law or an uncle or whoever, and they had a company and they came up to you and asked you to, invest money in their company. One of the first questions you'd probably ask them is, hey, well, do you make money? If he just laughed at you and said, oh, no, I don't make any money. In fact, we actually lose money. How likely would you be to invest money in his company? If you wouldn't invest in his company, why would you take the same risk with any other companies out there that lose money or don't even grow their earnings or have no earnings? Especially considering there's tons of other great ones out there. So in this one number right here in relative safety, instead of you going out and researching the company's quarterly earnings reports and company annual earnings figures, You have one number that does all of that for you. It also looks at things like how long the company's been around. A company may have had a great earnings report this quarter, but you come to find out it was the first quarter it's ever released earnings. So if you're looking at probabilities, what's the likelihood that this company is going to continue to generate higher and higher earnings over a period of time? Well, we don't know really. So it's a high risk situation. So we're going to put the RS a little bit lower. Therefore, this RS, or relative safety, would be below 1 in that case. A stock with an RS above 1 is safer and more predictable than the average stock in the database. So if you're looking for companies that have the ability to have higher and higher earnings over time, you want to look at stocks with a high relative safety. Those are the stocks whose prices climb year after year after year and are great long-term investments. All right, now finally we have the most important indicator of the three here, and that is RT, which stands for relative timing. You know the old saying, timing is everything, right? Well, that's exactly it. Because you can have the most fundamentally sound company in the world, but if that stock price is falling, you don't want to buy it because you don't know how low it can go. Just a quick little story here. I remember being at a seminar with Dr. DeLito, and one of our clients was in the audience and asked a question. He said he was watching a high RV and RS stock, and it was dropping. And he asked Dr. DeLito, "Hey, Dr. DeLito, when would you buy it?" And Dr. DeLito just simply said, "Well, when it stops going down." So the client said, "Well, how do you know when it stopped going down?" And Dr. DeLito just turned and said, "Well, when it starts to go back up." Basically, you'll be able to find that information with this one indicator right here. It's such a smart indicator. In this one indicator, we're looking at the short-term price trend. So we look at the day over day, the week over week, the quarter over quarter, and the year over year movement of the stock's price. It looks at a few things. It looks at what direction the stock's price is moving, either up or down. How much did it go up or down? How quickly did it make that move? And all of that is baked into this one indicator. Pretty cool indicator. Very simply, if RT is above 1, like it is on a few of these here, the stock is in an uptrend. The further it is above 1, the stronger the uptrend. When we get to lesson 2, which comes next, we're going to use RT to tell us which stocks are in a downtrend and possibly hurting your portfolio. So stay tuned for that. So it looks like in our list we've got 1, 2, 3, 4 stocks that have an RT above 1. 3 of them look to be in good uptrends, 1.19, 1.17, 1.16. A couple, actually there's one right here is in a slight uptrend. A couple are in a slight downtrend. But then we get down to these two right here, 0.62, 0.74. Those are in more of a stronger downtrend. Now you should know that RT is not an oscillator, which means just because it's at a high level doesn't mean it has to come down. You can have RT at a high level and just stay high, and it just lets you know that that stock is in a steady, strong uptrend. So you've got these 3 indicators here, RV, RS, and RT. To make things even easier, we combined all 3 into this master indicator here called VST, which stands for Value, Safety, and Timing. And we actually slightly overweight this calculation by RT, since timing is everything, remember? So anytime you look at a watch list, the stocks will be sorted by this indicator. So think about what that does for you. The stocks with the best combination of value, safety, and timing would be at the top, and the worst combination of value, safety, and timing relative to the other ones in the list would be towards the bottom. Remember, we're providing information, and we're not just displaying data to you. Okay. Now remember, one of the things every investor needs to know is whether to buy, sell, or hold, right? So that brings us to this recommendation column. A friend of mine, Todd Schaefer, he's got a great way of describing this. He likes to say you should think of this more like a noun and not a verb. I know I'm taxing you right now to think back to your school days, right? We're tracking over 8,000 stocks here in the US and thousands across the world. At any time, there might be like 1,000 that have a buy or 1,000 that have a sell. That doesn't mean that we're saying you as an investor need to go out there and buy shares in 1,000 companies. That's why it's not a verb. Maybe instead of a noun, maybe it's more of an adjective because it describes that stock. So think of them more like ratings. So these here have buy ratings. These two right here have sell ratings. In order to tell you the rules of how a stock gets a buy, sell, or hold rating, you first need to know what this stop price is right over here. Not only do you need to know when to buy a stock, but you also need information on when to exit a position. And that's where this stop price comes in. Our stop price, and it is a proprietary stop price that we calculate, this is a 13-week moving average, but we adjust it for the company's fundamentals. It's a lot smarter than just a plain old moving average because we adjust it based on the company's fundamentals. In other words, when I say fundamentals, I'm talking RV and RS. If a company has really good fundamentals, a high RV, high RS, what we'll do is we'll take that 13-week moving average and adjust it down to make our stop price. Let me give you a visual of this. It might help you understand it more. So here I've got my handy dandy clipboard, and let me just draw a couple of pictures for you. Let me get my pen out here. Let me come down here. There's my pen. And how about, I guess we'll just do red. So let's just say this is the 13-week moving average. Just a regular old 13-week moving average. If a company has great fundamentals, what we'll do is we'll take that 13-week moving average and we'll lower it. So let's say we'll put it down here. And we'll make that our stop price. I'll just put S for stop price. Think about what that does. If you've got a stock, and let's say it's trading up here, and this is, remember, it's a good, fundamentally sound company. By lowering that stop price, it gives it some more room to move down, because typically these stocks that have really good fundamentals, they tend to rebound and move higher over time. So you want to give them a little bit more room. So that's why we lower that stop price. And on the flip side, if you've got a company with great fundamentals and it happens to be trading down here below the stop, it'll get a buy rating faster. All right, so let's look at an example of a low RV and RS stock, so a company with poor fundamentals. So again, let's just say this was our 13-week moving average. By having poor fundamentals, we're going to say, well, we've got to raise that up. So let's just say this would now be the new stop price. So this was the 13-week moving average. This is now our stop price because we raised it. So again, if a stock with poor fundamentals happened to be trading above the stop price, it would get a sell rating faster. Like, it doesn't have to go all the way down here to become a sell. It would get a sell rating faster. And if for some reason it was trading down here below the stop price, it would take longer for it to become a buy. It would actually have to prove itself a lot longer before we would give it a buy rating. So let's go back into VectorVest and let's talk about the rules for a buy and a sell rating. So the easiest one to explain would be the sell rating. There's only one rule for that, and that's when the price of the stock falls below the stop price. That's it. One rule: could fall below by a penny, triggered a sell rating. And definitely stay tuned for lesson 2 because we're going to talk in more detail about that sell rating and how to use it. Now the rules for this buy rating, there's actually 4 of them, and I'll put them up on the screen here. Basically, the first rule is VST needs to be above 1 and RT needs to be above 1. So you might be thinking, well, isn't RT part of VST? Well, yeah, but what we want to do is we want to make extra sure that that stock is in an uptrend if we're going to give it a buy rating. And remember, RT looked at the short-term price trend, and when it's above 1, that stock's in an uptrend. So we want both of these to be above 1. Of course, we want price to be above the stop, otherwise it would be a sell rating, right? And the fourth one is this price needs to be pulling away from that stop price. So I always think of it like an alligator mouth. We got, let's just say the stop price would be down here running flat, and price would be pulling away from it, moving up. Okay, so those are the 4 rules for a buy rating. Okay, so big summary here. How do we use this information? Remember, the big idea today was to be able to analyze any stock in less than 30 seconds. Now that you are armed with this information, watch what you can do. You can take any stock and do this analysis. For example, I've got this first one here. Watch how quickly you can do an analysis now. So first off, you'd start off with price to value. You'd say, wow, this is nicely undervalued, and that's good, because VectorVest favors undervalued stocks. Plus, it's got the potential to outperform a AAA corporate bond by 30% over the next few years. That's very good. It's extremely safe compared to the average stock in the database, so that's excellent, and it's in a slight uptrend right now, and VectorVest gives it a buy rating. You see how fast you could do that? Let's just pick another one. How about this one right here? So here we can see, once again, undervalued, which is great. It's got the potential to outperform a AAA corporate bond by 42% over the next few years, so that's excellent. It's extremely safe compared to the average stock in the database. But notice this, it is in a slight downtrend right now. So even though it's got great fundamentals, it's moving down, so now wouldn't be the best time to buy, so VectorVest gives it a hold rating. Then if we look at this one down here, you can see it's fairly valued, but over the next few years, it's got the potential to underperform a bond. So basically it's saying you'd have a better return, potentially, just by putting your money into a bond. It's riskier than the average stock in the database, and it's in a strong downtrend right now, and thus it's also got a sell rating. So you see how fast you can do this analysis just by putting these stocks into a watch list. Now let me show you something which is going to be part of your action items tonight, and that's to be able to pull up a full stock analysis report. So you're going to want to come to any one of your stocks, and in the action items it's to pick your favorite stock and just right click on it. And then one of the choices in the list is this one right here, View Full Stock Analysis Report. When you click on it, it pulls up a nice report, and as you scroll down, you're going to start to see that it details all the columns that we were just looking at, plus all the other ones that are in the list. This is an excellent resource for you, so you're going to want to print at least one of these out and keep it by your desk. That way you have this resource telling you what each of the columns mean, and it also tells you how your stock ranks in that indicator. All right, so that's going to be part of your action items tonight. So speaking of those action items, let's take a look at what you should do right now. All right, action items for you for today. Number 1, print a stock analysis report of your favorite stock. So just right-click on your favorite stock and click on Full Stock Analysis Report. Keep that report right next to your computer as a reference. Number 2, make sure to build a watch list of all the stocks that you currently own. We'll use this list in Lesson 2. If you don't own any stocks right now, put together a list of stocks that you have owned. Speaking of Lesson 2, in Lesson 2, we'll take your stocks and I'll show you a technique we call weeding the garden. You'll learn how to identify the stocks that need to get sold. I'll also show you how to use stop prices effectively, and I'll give you techniques that will allow you to maximize your profits and minimize your losses. All right, be sure to finish your action items, and then I'll see you in Lesson 2.